Okay. Yeah, that's why you couldn't hear me. Alright, y'all can hear me? Make sure y'all can hear me. Yeah, that was on me. So let me post this and then I'm gonna get into exactly what I'm looking for. My next setups. I got some good looking setups that I'm looking for, so I'm definitely excited for this week. We have NFP this week, so it's going to be, I'm expecting a lot of volume this week, so I'm expecting a pretty good week. Alright, so let's start off with the DXY. Let's go to the weekly time frame. So we're taking a look at the previous weekly. Now, though we could take a look and let's just dial it up so we can see. Now, overall trend for the weekly is bullish. We can see we had highs being broken here. Price push for a new high. Now we're seeing what could be a corrective structure, and now what could be actually the end of a corrective structure. If we look at the previous weekly, we have been creating lower lows and lower highs. So you can see price has just been continuing to go down here, creating these lower lows and lower highs. And now more recently, we're starting to see a break for potential new high. So this could be a potential larger time frame change of trend direction if we get breaks above these highs here. Now, price failed to close above these highs, but I think this week is going to be really important for setting up what we can see for the next couple of weeks. Because if we get now a bullish candle to close for this week and price closes above these levels up here and breaks for new highs, so this would be, let's go to this, turn it down some, buy candle, here we go, and then we see it looks something like this. So if we break for a new high, I want to see price continue to push bullish for the next couple of weeks to attack some of these larger time frame structures. But if price in fact closes bearish this week, something similar to, like, let's say this, and we can expect the next weekly to form another bearish candle, and continue pushing potentially down in the direction of this overall trend. And now we will start to look to target back down into these lows, and we can see price continue pushing in the direction of the trend. So that's why this week is very, very important on how this current weekly candle closes. Also, this is the start of the new monthly. So the end of this week will be the start of the new next monthly. So our current monthly is bullish. It's likely that it closes bullish, even if we see this weekly close bearish in the next couple of weeks to close down. This monthly will be a bullish monthly candle. So that's an inclination that this potential bullish wave isn't over, and we could potentially push for some new highs. So that's just what we can see currently. Now, if we take a look on the smaller time frame here, volume is relatively slow for the DXY today, nothing crazy. And actually, let's take a look at some other pairs. But as of right now, we got to see market direction is bullish. So obviously the dollar has just been creating higher highs and higher lows, and we're on a bullish wave. And so not looking to fight this bullish wave, honestly, just looking to continue to ride this bullish wave specifically. But if we take a look here at AUD USD, there wasn't actually a really nice move this morning that we could have capitalized on. And we talk about capitalizing on moves like in in the direction of our trend, but sometimes price will give you on earlier on in the week a potential move, let's say like this, and I want to break it down. And these would be, as I was breaking down to like my brother before we even hopped on the stream, these would be moves that we would be quick to move stops to break even and secure profits, because we understand that it goes against the larger time frame trend direction, but this was just the move that was available. So if I remove all of my drawings here, we can see that price had came down and we got a low created here. So this is our low. This is where we can expect price to go long term for the next, you know, potentially couple days. This could be the target, and potentially back down to these lows to break for some new lower lows for EU. But as of right now, today, the move so the move for today is price came down after creating this low, created a high, a lower or a higher low, because this low is higher than this low. So this is now our higher low. After it broke this high here, we got a corrective structure, and if we refine this down onto the, I believe it was the 15-minute time frame here, you can see that as price tapped into our zone, this was our bullish signal candle. Buys at this level for price to fill, oh man, buys at this level for price to fill this gap back to the upside here, and overall probably target these levels. But even after like a 1-to-2, 1-to-1 on a Monday where no volume, and I talked on the stream this weekend that AUD USD is generally the first chart that gets a move throughout the week, because when the market's open, it's during the Sydney session. So we get the Sydney session. That's at the time that the Aussie banks trade, or the Sydney banks, they trade, which influences the AUD. So we get some type of volume. You can see Sunday is yesterday when we got this break for a new high. We got an impulsive move back down, and we could see price continue potentially in the direction of the current wave, which is now bullish. So this would have been the first most immediate move that we could have capitalized on this week. And though price has been creating lower lows, and we do anticipate this low to get targeted, our previous high is up here. So this larger time frame structure is still bearish until this high is potentially broken. And realistically, I would say this high right here. So this is our high, because we got a corrective structure, we got a break for a low, broke for a low, corrective structure, that was the high. Now the high becomes this one, because that's when we broke these lows down here. So this is the high, and you can see that area never got broken. So price continued to push down, similar to how we seen 2 weeks ago when we was on stream with EUR USD. Let's take a look at how EU had created this low. We had pushed down, created a new low, then we got a corrective structure up. This was a bullish wave, but we anticipated price to still come back down to target this low, because this was our trend was down, and we are actually able to capitalize on these sell moves when price came down to this 30-minute refined zone for price to continue pushing to these levels and these levels here. And I'm not gonna lie, I took this sell and I closed, it was like a 1-to-3, and I closed 80% majority of my position here, even knowing that price could target back down to our key lows. And I was a little bummed out that I didn't hold to this full take profit. And so going on this week, that's what we're gonna make sure that we do for real. We take advantage of this, yeah. And let me know if the music is still loud. I can turn that down even more. So what I'm looking at now for AUD USD, since we did not get that first initial move back up to these levels here, if we do get a break for new higher highs, breaking these highs up here, then I'll look for now buy positions And for me to, in order for me to take sell positions to continue in the direction of this trend here, back to the downside, I need to see a break for a new low. So this low has to get broken here for me to want to take this this sell, a corrective structure. Now I can look to get my positions for price to continue to target the low. Exactly what we had did for EUR USD right in these levels. So this sell stops above, targeting back down to the low. It will look essentially just like this. And let's go through it like how it would look bar by bar replay, because I want you guys to see. It's easy to see after the fact, but you got to see the confirmation as it happens. So, and this is, I'm breaking it down because, you know, we don't have an immediate move, so we have time to dial into these moves. Because this is exactly what we're expecting. Price pushes up into our zone. We get the bearish candle to close after coming into our key level. We know that this is our low. This really shouldn't have even been a target for me. It really is just a level of resistance, but understanding that this is the low here. So, you know, we could get a reaction off of this level, and we did get a reaction off of this level, and I was able to close profits, but it never came back to our entry, and it ran through take profit. But this is what we're expecting on AUD USD. So let's look at it where we are now. This is not even our target. Our target is back down here, and essentially a sell after coming back into these levels wouldn't necessarily be a bad idea, but I honestly would just want to wait for a break of these lows to let me know that this isn't going to break for new highs up there. So coming back to, like I said, with EU, bar by bar replay, we seen our confirmation candle, went ahead and took our entries. It was at our session time. You can see it's 4:30 in our session time, which is the start of the London session is at 3 for me. So this was in my session time, and you can see as it played through, we hit that target, and we definitely had some resistance at this level here. And my target was at this low. This is where I closed my profits, or got taken out, shall I say, with profits in this level. And then it continued pushing down to the full take profit, which is where we should have held. So that's what I'm anticipating to be seen on AUD USD, is a move similar to that wave there. And honestly, the break below in the corrective structure and push down, that's what I'm looking to get, which would be essentially, it would be essentially like this wave here. So as price broke this low and it formed a corrective structure, that's the entry that I would look to take. On the smaller time frame, you have to refine your entry to find where you would get in at when this candle closed bearish. So when this candle closed bearish here after tapping into this level, this is a buy. I gotta switch these. Stops above, targeting back down to the low. That's essentially the move that I'm looking to get on AUD USD as far as like the wave that I'm looking for. And it's similar to the wave that we had caught last week on GPJPY. Let's see. Where was we at? Oh, right here. So we had this impulsive move to the downside, impulsive wave down. We had a corrective structure up to retest key levels up here. But we wanted to know that this bullish wave was done. So in order for this bullish wave to be done, we had a low created, a high, a lower high, and this is a higher low, excuse me. And this is a valid higher low because we broke for a new high, came down and created a low. This is our low now. We understand that we just retested a larger time frame level. We have a high volume move to the downside. We're at a retest level. Now we're just essentially looking for the change of trend to say price is ready to go down. And granted, taking sales after the 4 hour, because if we go to the 4 hour candle, you'll see 2 4 hour candles close bearish. We could have taken those entries, but I wasn't awake until right in here, but I wanted to wait. I ended up getting the entry. It was like 1 o'clock for price to continue pushing down, and it was a good move and honestly a safer trade in my opinion. So we waited for this low to be broken. When this low was broken, we got a retest of that area. We got the bearish signal. We went ahead and took our entries for price to continue pushing down to our final take profit. And this is how I was able to pass a 400K funding challenge as well as a 200K challenge, phase 1, on specifically that move there. So that's what I would look for that's the type of setup I'm looking for AU. And now we can see, and so what I need to know is when price breaks this low here, especially after this 1 hour closes. We got a double candle wick rejection. Previous 1 hour doesn't have a bottom wick. It's likely we could see the next 1 hour candle form a top wick, and even if it takes 2 1 hour candles. So let's see, something like this. Whoa, candle's looking real thin there. All right, so something, there we go, like this, we can start to see the breaks of these lows here, and then it's likely after that, goodness gracious, it's likely after that we start to see a corrective structure, a retest, and then that continued move to the downside. And that's what I look to trade. This is just a little foreshadowing. So essentially it'll take probably like, let's say 3 hours or something like that. And this 1 hour candle, I mean, obviously don't know what it's doing, but it could start to push down. We had a move, I want to say about 2 weeks ago for the DXY that happened, and it happened on the DXY and it happened on gold, where price didn't come directly into our retest level, and we did get a break for a new low and push down. Let's see if we can find it. One was on the DXY. It was like, let's see, let's go to daily. Oh, here. And we can see how that actually went. So we was looking for price to come into this level, into this zone here, and it didn't come into this zone, and it had pushed down for 2 days. So, you know, we capitalized on the structure inside of the days. So when it had got like up here and it didn't quite come to our zone, it had pushed down, and you can see that's when we had broke for a new low. Even though this whole larger time frame wave has been bullish, we were looking for a potentially like a reversal at that level and push down. But we can see that, you know, price didn't even push down. So the overall trend is bullish here. Yeah, of course. So is there any charts you guys want to take a look at specifically? Let me see, actually. Let me check and make sure my audio is up. Yeah, let's turn this up. All right. Turn the mic up. All right. So is there any charts that you guys want to take a look at? My next move is literally going to be likely AUD USD or GBP JPY. Let's take a look at GBP JPY. GBP JPY is at a key level in the markets, and similar with AUD USD, just not the cleanest structure. This is why I wouldn't have taken it over AUD USD. If we take a look at AUD USD, we have clean candles as far as price action. You can really see it better on the smaller time frame. We got nice clean ranges, and for GJ, it's just we have all of these wicks, and it's just not the cleanest price action or whatever. But you can see that GJ has been on a bullish wave, and this has just been creating higher highs and higher lows, and it's easier to see if we take a look, like let's say on the 1 hour time frame. We see price came down, broke for a new low. So The overall time frame is bearish. We know this. We just got a high impulsive move to the downside. We're seeing now that a corrective structure price came down, broke for a new low. This is what we're anticipating to be a corrective structure for now a steeper move back potentially down. And if it doesn't, and then we see this level get broken up here, we can see price continue pushing bullish all the way through back up to these levels here. And so we would just capitalize on that move. And how that would look is we would see a break above these highs, corrective structure. We would take our entry and look to target these highs up here. Similar to what the move would have been like for AUD USD today on the smaller time frame. We see price had this move down. We broke these highs on a smaller time frame. You can see the corrective structures form. Broke these highs, pushed up, corrective structure, and price just continued pushing bullish, but just correctively. So nothing nothing too crazy. So for me, honestly, I'm just waiting for a potential continued move down. I need to see a break of these lows here, because this is my previous higher low. Price came, we broke for a new high, so this is my low. Until this low is broken, price is still bullish for me. So when we get a break of this low, and let's put an alert here, I want to be notified. So let's move this. GBP, JPY, break a new low. Break, let's say break for a new low. That's my next move for GBP, JPY, and I think that is going to be a good move, and then we can see potentially these lows get broken. Now, I also want to be notified if we get broken, if this high gets broken here. Let's move this, or actually, no, I like that one. And I gotta change the borders on it. I don't know why my borders is all got this like purple on it. It won't even let me change it. Wow. Would you look at that? Oh, there we go. Oh no, this is text. Style. Yeah, this should be like blue or something. Alright. Template. Let's delete that. Save as. This is just gonna bother me if I don't. Alright, there we go. So if we get a high broken here, I want to be notified. So GJ new break for new high. So I want to be notified then there. GJ is likely going to be the next pair that I trade if I don't get this. Why is it not letting me grab it? Okay, well, it's gonna be the next pair that I trade. Personally, AUD JPY, we could definitely take a look at AUD JPY. My dog Seuss, one of my main men right there. Well, let's take a look. Oh my goodness, this is a hideous box. I obviously haven't been looking at AUD JPY in a minute. There's no telling where these two lines came from. It's been a while, a couple months since I've taken a look at, yeah, AUD JPY. And they like, yeah. Okay, so let's take a look. Let's start with the monthly. Looks like it's going to close bearish. All right, let's go to weekly. Weekly, impulsive move up, corrective structure. Overall time frame has been bullish, but I can't deny that we're on a bearish, or have been on a bearish wave here. Now, it's not been the prettiest, as we definitely have an impulsive move up. So impulse, corrective structure, and this is on the weekly time frame, and this just goes to show how important structure is. It doesn't really matter what time frame you're on. Structure is very, very important. So impulse will move up, corrective structure down. Right now, honestly, it's not the cleanest JPY pair in my personal opinion, but it's been selling. So we have a low created here. This is our previous low, our previous lower high, and what you can see with AUD JPY is that we're just in this essentially in this no man's land range, in between structure, I guess you could say. And this has been on like for a while now. We're just in between this structure. Now the overall trend is down. So where would I be looking for as far as like a next target for AUD JPY? I would be looking for sell moves for price to push potentially back down to break for these lows here. And honestly, the best trade for me for AUD JPY would be a break of these lows here. And you could look to capitalize on the smaller time frame moves, but I just honestly personally, if I'm looking at, you know, structure, you would be taking smaller time frame buys, because this wave that we got here has been bullish, and this would be the only thing that I really think you could capitalize on, because this 4-hour time frame it's not really going anywhere. Because in this daily time frame, you can just see we're kind of like in this range, really seeing it on the 4-hour time frame. But this wave is bullish, so if you would wanted to capitalize on like the most immediate next move, looking to just ride this continued bullish trend, price just created a new high, broke for this high. We can see now if this high gets broken, this becomes our key low. So this would be the key low after this high gets broken. And if this high gets broken, then we will look for price to now continue pushing bullish, and then we could target back up to the top of that range that we got here, and then potentially price to start showing us what she's going to do after that. If you look at it, you see the previous weekly closed bullish. So, you know, a continued bullish move wouldn't be, you know, a bad bet as far as the weekly. You can see we have like resistance at this level. That price is just, and you can really see it right here, it's just struggling to break through these lows. And this is where we have that key low at. So this is why I would say on the smaller time frame, you know, just continuing to ride this bullish wave would be the only, you know, thing that you could really do as of right now. And then the best move would be if we can get some breaks below these lows here, then now we can start targeting these those larger time frame levels. So that's what I would take a look at, honestly. But next immediate move, just continue to ride this current wave and understand that, you know, it's low. Take it at lower risk, because this could be, you know, at any moment this could continue to flip and go into the direction of this larger time frame bearish wave down here. So definitely be cautious. But as far as the most immediate move of the day, and I just always focus on what I can capitalize on today, a breaking above this high, and then a corrective structure, and then target whatever the high is that was created. Not necessarily this level to break for new highs, because we know that at any given moment price could flip. And even if you want a safer trade, target this level of supply. So whatever the supply level is right there, that would be a good target level to go ahead and take profits or secure some profits. Because even if it pushes up, it's likely before it hits this level that we get a corrective structure. And you'll see this consistent with a lot of the trades that I take, and then a continued push up to break through that high. And you never know that this corrective structure could not just be a corrective structure and a push down for price to continue pushing in the direction of the trend. So that's why I think that this would be the best place to take profits. And then, you know, if price continues to break for a new high, now you can then look to continue riding in this trend, understanding that you're coming closer to these larger time frame levels. And then you would target the high, and you would just repeat the process, you know, back to the supply until this starts giving, you know, any other potential moves. But as of right now, I'm relatively bearish on, you know, all of these like JPY pairs. I believe that they're like very overextended. But even with like USD JPY, we take a look, price has a high here. We have a high created here. We just broke for a new high, a higher high. But you can see even in this wave here, how price came back to this key level of demand. We got a reaction, and then that continued bullish push back up to this targeted level. This is what I call a re-entry. So after price creates a new high, these are all essentially re-entries. This push is to show us that price is bullish, is still having, you know, a bullish reaction off of these previous levels here. Corrective structure back down into this key level of demand. And then you gotta wait for like your bullish candle. And let's refine this 15-minute to here. Stops below there. And this is our key level of demand, and then we get our bullish closure. You would be within, anywhere within, you know, the top of this candle and the bottom of this wick is a valid entry. Now obviously you want to get, you know, closer in here if you can, but you know, anywhere within this range is a solid entry. And how I normally do it is I'll take an entry on one account, and let's say at this level, and then I start seeing price pulled back down because I manually enter all of my trades. So then I'll take an entry at potentially like, you know, maybe down here within this wick, still with the same stops, but you get a little bit better risk to reward on a different trade, and then looking to target these highs that we have there. And even right here would be a safe, you know, a safe entry or a safe target. But price has just been so bullish, it's likely it just continues pushing for new highs. So likewise with, you know, AUD JPY with UJ, and I think UJ would be better than trading potentially AUD JPY. I think that this is more bullish than how we had AUD JPY is kind of like in this well, it just took off, but it's within this range. That's ridiculous. That must mean AUD USD would have hit that target level. Yeah. Oh, and this is what I mean by you normally get a corrective structure before take profit is hit. So like with the AU move today that I was talking about that we could have potentially taken after price, you know, we broke for a new high right here. This is our key low. If this low gets broken, we look for sell positions. But if it doesn't get broken and we get that bullish reaction off of the level, then this one would have been the entry. Long position, stops below, and this is in the way. And then target back up to retest this imbalance that we have formed. This is the corrective structure that you normally get before, you know, before hitting take profit. And it's consistent with all the trades that I take. If we go to EU, or let's go to GBP JPY. The trade that we took last week for GBP JPY, when we took sales at these levels here, my overall target was back down to this low. Short position. I took entries like right in here. Goodness gracious. Stops above. After we broke for a new low, we retested, and my target was down in this level. We can see price push down. I was up like on my live account. I closed those challenge accounts because I had passed them. But on my live account, I was up like $1,500 at this lowest point, and then price corrected all the way nearly back up to almost a 1-to-1, which was like $500. And then before pushing all the way down, it, you know, ran to the full take profit there. Though I personally closed like in this level here, and I should have held to my full take profit down there. But these are the improvements we got to make for this week. So is there any other charts, any other charts you guys want to take a look at? It's a relatively, Mondays are generally slow for me. There's always generally one move, one solid potential move on Monday, and I normally my track record is rough as far as missing that first move on Monday. Let me pull this down. Let's go to this one. All right. So immediate next moves. If this high gets broken for AU and we start to get a larger time frame corrective structure, I'll look to take continued buys. But that's only if this low is respected. So right now, this is my previous lower low, but if this breaks for a new high, and especially if we get a break of this high, this now becomes my key low, and I'll move this alert from where it's at now to up here, because this will be the low that I need to get broken in order for us to take sell positions, and then buy positions, if we missed that first move. This is GBP JPY, so we missed that first initial move, but it just wasn't the cleanest price action. Let's see. Yeah, so a break for a new high up here. After that, corrective structure to retest back into these levels, and a continued bullish push is what I would say. But we won't set the alert for this level until this high is broken. So as of right now, our alert would still have to go below this low, because this was the low that broke for new highs. We're anticipating this to be our higher low, but we still have to wait for it to break for a new high in order for it to be our higher low. And then you can look to capitalize from there, targeting whatever the high is that's created. But if price now breaks this level, corrective structure, and a continued push down, now we're continuing in the direction of this larger time frame trend. We start targeting these levels and these levels down here, and this wave is now over, and it's time for price to get back on to the direction of the larger trend. I think that's the best move. I mean, and this, we gotta keep this thing simple. Like, this is the easiest way I feel like to trade. It keeps it very, very simple. What wave are we trying to trade? Well, this wave is bullish, so we're just gonna keep trading this potential bullish wave until this wave is over, and then when this wave is over, it'll be indicated by the lower lows getting created. We'll see a corrective structure, and we gotta expect and accept that we know that this is just a corrective structure. So this is a higher risk trade. I would honestly take it at a less risk if I'm going to, especially starting off early in the week and understanding that we got this impulsive move to the downside, a corrective structure, and a break for a new low. This is my key high here. Buying this wave would have to be at a lower risk, because at any given moment, one of these trades that we might take could be a losing trade. So like, let's say we had taken this buy here from this morning with a stops below, and price had retested into our key level. Boom. So we took this trade here. So let's say price pushes up to here instead of pushing up for, this would be our target. But let's say price didn't make it. Let's just say hypothetically price didn't make it to our target level. This would be our target because that's our high currently. And then from here, and honestly, since this is a higher risk trade, you would want to move stops to break even to protect us from these scenarios. But let's just say it pushed up, you didn't move stops to break even, you wasn't looking at the chart, and then we get this break up below this low here, and we start to get this corrective structure, and now we can see price continue pushing down. You have to expect that this could happen because the larger time frame trend is indicating that this is the next potential larger time frame target. Though today's opportunity was on this buy because we had a new high, that's just this wave. This wave here doesn't overpower this wave here. This is just a corrective structure. This wave overpowers this wave. Today's opportunity is this wave, yeah. And so we can capitalize that on that at low risk. Understand that any given moment, price can now flip to continue in the direction of what the trend is. Back down. To potentially create some new lows there. So that's why both Mondays and corrective structures for me are just generally lower risk. Last Monday, we ended up taking an L on EU at a low risk. I don't remember exactly where I took my entry. I think I took sales in this level. Is this Monday? Yeah, this is Monday. So I think we ended up taking sales in like this level here. At our session time, price had just broke for a new low right there. We've seen that we got a corrective structure back up to our key level. Price closed bearish, went ahead and took sales, short position. Come on now. Short position, stops above. Looking to target back down to the lows here that was created. And we didn't see that happen. But understanding that this volume right here was already slow to start with, and that it was a Monday, I took this at a 0.5% risk. So when we had a good move that happened on Wednesday for GBP JPY, and we got the break of this low here, and we ended up taking these sales within these levels. Somewhere within here, I like 104 was my entry, 261 was my stop loss. Back down here, I took this trade at a higher risk, 1% risk, and was able to make a 1 to like nearly 5 risk to reward at 1%. So taking a L on EU early on in the week at a 0.5 risk, that's let's say $500, and then we take a full take profit trade here on Wednesday for, you know, nearly 5,000. So you lose 500 early on in the week and then make potential of 5,000 right there at a full percent risk in the direction of, you know, our trend. So that's kind of how I go about Mondays. I either won't trade Mondays or definitely have a reduced risk for Mondays, because, you know, markets are just setting up for the week. That's how I see it. This AU trade would have just hit the full take profit, and that would have been a solid move. That would have been a solid move. So we're just gonna have to wait for our next potential trade, and if price breaks for a new high, breaking these highs up here, then we'll look for our corrective structure and potentially continue to ride this current wave that we're on as far as this bullishness here. Because if it breaks this high, this was our key high up here. So this is our key high, because this is the high that started the break for this new low. This new low here after we had broke these levels. So we broke these levels, created a new low. This was my high. Corrective structure, still haven't broken the high, got an impulsive move to the downside. Today's move would have been this buy up because we had broke this high. This wave is bullish. Even though we didn't break for a new high, we could anticipate potentially a new high to be broken. The most current move is this move, but the overall target, as long as these highs aren't broken, is still back down to create new lows for AUD USD. So though today's move and opportunity would have been bullish and it would have just hit the take profit, this is where you want to take profit. And this is why I was saying earlier on in the stream, instead of targeting back up to these highs for these corrective structure moves, to take profit at these the key level of supply or the key level of demand when you're going against the trend. So not only would I have taken, if I would have taken this move, I would have taken it at a 0.5 risk to reward, or I mean not a 0.5 risk to reward, but a 0.5% risk. I would also go ahead and close profits at this key level, anticipating that price can get some type of reaction and potentially continue in the direction of the larger time frame trend from that level there. And even if it continues to push bullish, that's no problem. We'll just get the next move back up here. After price creates a new high, we'll get that corrective structure, and then we'll look to get those, hit those targets. Yeah, the markets, yeah, they're definitely turning today. Today is a bank holiday, I believe, for the UK. So it's just it's been relatively slow, and this would have been the only move to capitalize on for me personally. Just the only move to be able to capitalize on. But I don't really be pressed to trade on Mondays. It's just, you know, I know a lot of people do trade Mondays. I'm really not inclined to trade in Mondays and Fridays, realistically. Those are 2 days that I'll go 0.5% risk. And if an opportunity presents itself, I'll strike. And then if it doesn't look too clean or I'm not feeling too confident in a move, I just won't take it on those days, knowing that, you know, especially on a Monday, knowing that we could have a potentially, you know, we got a long week. We got a lot of volume this week. We got NFP this week. So I'm really not looking to force any trades on a Monday. But there was an opportunity, and we didn't capitalize on the opportunity, but I definitely wanted to dial in on the opportunity because, you know, essentially this is what we do day in and day out, is these same moves, these same setups. How could we have capitalized on this wave? You know, how would we have gone about it? And what is the next moves? This is all a part of being an ace trader. I think, you know, and that's just how you keep yourself fresh. You keep yourself locked in, always knowing, you know, what it is your next move is. And especially over the weekend, you know, break down what, you know, review the trades that you took throughout the week. I'm getting to the point now that I've been explaining all of the trades so much that I just remember the trades by heart. That's why I can jump to EU and tell you the exact trades that we took, you know, for the past 2 weeks, and the L's and the dubs at the exact areas my confirmation, just because I just seen them so many times. I've been repping it, and it makes me confident in my strategy and in the way I capitalize to now take the next trade too. It builds that confidence. I don't know, sometimes over the weekend you get that reset, and then a little bit, at least for me personally, you get that reset and then it's a fresh week. So there's either like there's always an uncertainty at the beginning of the week. You don't know if it's going to be a good week. You don't know if it's going to be a bad week. And for me personally, that can sometimes, you know, hold me off of some moves, or in the past, I can say it's held me off of some moves. But that's when I learned, you know, just to take the moves that present themselves at a reduced risk and get over that stuff, because you got to capitalize on whatever the opportunity is today. Though you don't have to take every single trade, and you shouldn't feel like you have to take every single trade. I wake up every morning anticipating to at least take one trade, and if there's one opportunity, I should take it, you know. And so, though I didn't get today's opportunity, there was an opportunity today that we could have capitalized on, and it was here on AUD USD. And no sweat on that though. We got a long week. My goal is to throw down a perfect week, a week of getting every single potential opportunity for a full 5 days, and really just a full 4 days. I don't really like trading Fridays, like regardless of if it's a good move or not. I'm really not too inclined to trade in Fridays. But we got NFP, so after the volume from NFP is, because Fridays are generally just kind of slow. That's why I don't trade them. But days like NFP, I'll trade the aftermath of the volume after the spike. So yeah, I just want to put down a full throttle, full week of just pure execution on every opportunity, not to miss on any opportunity. and see what that week looks like. See what that week looks like. So, though it's not this week and we missed this one, the week is not over, and we're still going to catch some great moves this week. I can feel it in my bones that we're going to get some good moves this week. And as long as we abide by our strategy, we continue to anticipate, wait for our confirmation, and then we execute, we should come out, we did everything we could do. So we should be proud of that always. The results don't matter. The results are a byproduct of the system that we have in place. The results should happen. My coach used to tell me we should expect these results because we put in the systems in order to reach said results. So we shouldn't be, and that's why I think they say that you need to master your emotions even when you're winning, to be, not let it get you all built up. You should be winning because as long as you're abiding by your rules and your edge your strategy gives you an edge in the markets, then this is what should happen. You should expect to win. Though we can sometimes take losses, you should expect to win. So, and that's just if you abide by your system and your system has a good edge, and we have a really good edge in the markets. It requires us to be patient, and we have to be disciplined and wait for structures to play out. But everybody does, no matter what strategy you trade. Everybody has to wait for some form of confirmation or some form of signal to get in and enter a trade, no matter who you are. So this is consistent with whatever type of strategy you trade. Regardless, you need to be able to abide by your system, whatever it may be. And then by abiding by your system, you'll start to see tendencies and habits, things that may need to improve in your system, and things that you may need to tweak. How can you know if something needs to be tweaked if you can't even abide by the system? Especially, because those trades essentially don't count. All the trades that you took outside of your system do not count towards the data of your system to prove that your system is in fact working. If you're taking all of these trades that are outside of it, or even if you are developing a new system or you're using our system now, you have to build the confidence for yourself. So back testing it and then even taking it at a reduced risk, you have to abide by the system in order to gain that confidence in it, for one. And then it brings all the truth to your system to light. So I can tell you specifically, I used to trade a breakout strategy. There was one problem with trading the breakout strategy. Let's just say price broke out of this low here. The biggest problem I always had with trading the breakout, and I would look to target the next key range, whatever the key range is. And this is kind of how I started to understand. Let's just say, for instance, there's some resistance back here. Price wouldn't have reacted like this if there wasn't. So let's just say there's some resistance back here in the past, and we know that this is the next key range. I will look to trade at the breakout and for price to continue pushing down to the next key range. Now the only problem is, and let's say the range is, let's refine this, let's say the range is right here. The only problem would be with this is when we took this breakout, I seen consistently when I was able to wait for my strategy and to play out. For one, my average risk to reward was about a 1-to-1. So that was the first flaw in the system. It wasn't conducive to passing challenges. If you got to take every trade at a 1-to-1, you got to take a whole bunch of trades. I'd rather just take one trade that can get me, at least 50% there to my target or whatever. So for instance, this trade would have ran 1-to-3. That's cool, whatever. But the problem was, before I hit my take profit, we would always come back to my entry and then push down to my take profit. And I would move stops to break even, and I kept getting stopped out at break even, and price would continue pushing down to my take profit. Because I started abiding by the system and just stuck with it, I was able to point out that flaw. And now from there, I was able to create now my refine my system to understand, okay, the breakout is not what I want to trade. This wave is not what I want to trade. This is just the wave to indicate that price is still going down. What I want to trade now, and then you couldn't have got this high volume move, but now what I want to trade instead of this breakout is this wave here. So on the smaller time frame, we could probably see it a little better, but essentially this is the way that I want to trade, and this will take me to my full take profit here. So like with GBP JPY last week, if I was trading the breakout strategy, how I traded that, how we took the trade earlier on in the week. Let's see, where was we at? We were over here. I take this breakout strategy. Price breaks this low. When we start moving in profit, I would move stops to break even. So let's short position. Stops above the candle that broke out. Entry on the next, bottom wick of the next candle, anticipating price to come back down to here, right? When price would push down here, short position, let's go bar replay. I would be like, okay, let me go ahead and move stops to break even. Taking a risk off. Partially was fearful, but understanding part of it was like fearful, but also understanding that I would normally get stopped out if we form, low volume like this. It would likely, continue pushing bullish. Now, why didn't I know that? Because price, obviously created a new high, whatever. So I would get stopped out at break even, and then price would go in the direction back down to my take profit. And it would make me so upset. So now I was like, okay, I'll wait for price to show me which direction. And another problem I was having is I wasn't trading in the direction of the trend. These were losses that I was taking because I would try to always buy the reversal. Price is reversing. Okay, we try to take buys back up to, let's say, from here. Price just had this sell move down. We're trying to take buys in this level for price to continue pushing up, and it was sell in the direction of the larger time frame trend. Another flaw that I started to notice. That's why my strategy is the way it is today, because I had to go through all of these different things. I had to learn, but you only learn those things if you abide by your strategy to be able to point out those flaws that your strategy has. And so from that, I was able to develop what has been really working for me, is just riding the direction of the trend. No matter what the wave is, just ride the direction of the trend. If we're riding this wave, then this trend is bullish. This wave is bullish. That's what I'm riding. So I just look to capitalize at the entry, not trading the breakout, but trading when the retest happens, and then look to target back up to the highs for price to continue pushing in the direction of the trend. That's why that's how we developed it, and starting to understand what is a change of character, what is a change in trend direction. How do we spot when price is now going from bullish to now bearish? And it comes with understanding how to identify this move here. This is your change of character. Why is this our change of character? And realistically, the break of this low is our change in trend direction. That's why I waited for GJ last week for it to break that low, because it was our previous lower high, for price to now retest, and it retested like this and continue pushing back down. It looked more similar to this move here. We need to be able to understand that price just broke this key low. And why is this a key low? Because this key high was broken out of, and then price pushed down below this low here. Now it changes the direction of this trend. And if the larger time frame trend is like this, we can now anticipate price to push back down to our key lows here. And this change in trend direction would indicate now, when we got this break of this low, that this wave is no longer bullish, and now we're on a bearish wave, and we could potentially continue in the direction of whatever the larger time frame trend is, if the larger time frame trend was to be like this. So it's just an extra confirmation that price is now ready to go down. We tap into a key level, and then we get that change in character, and price can continue pushing in the direction of the trend to target back down to the lows. So once you understand those couple simple like principles, now it makes them understanding the markets a lot easier, because now you can see, okay, price is creating higher highs and higher lows, and now you understand why I need this low right here to be broken in order for this to be considered bearish instead of now being bullish. It needs to break this low, and if we get a break of this current high here, this now becomes my key low that I would look for to get broken for price to continue pushing down. But until this low is broken, I would continue to take buy positions. Let's say it breaks for a new high, continue to take buy positions in the direction of the trend, because nothing has yet indicated that this wave, this bullish wave, is done. So since nothing has indicated this bullish wave is done, we keep riding the direction of the trend until we now see, that change in trend direction. And then when we see the change in trend direction, we hop on the trend. And that first move in the change of trend direction is generally the best move. So you hop on that, you could potentially get yourself a re-entry. Here and a continued move down. Now you could take 2 trades on this same move to the downside, which is what we wanted to do with EU 2 weeks ago, and I ended up missing the very first trade. But when price had created this low here, let's go bar by bar replay so you guys can see. Let's just go from here. All right, so price had created a low, it created a high, tapped into the key levels, boom, tapped into our key level, bearish candle, push down. We wanted to target this low, price continue to push. We didn't get that entry, and then let's go to the 30-minute time frame, because this is where we took our entry. We were able to capitalize on the re-entry for that continued move to the downside when price tapped back into this level up here, and then when it tapped in, we got our sell move back down to our targeted level. So this was supposed to be our first entry, and this was the second entry that we had ended up actually capitalizing on. And that's what I mean for like what was we just looking at? GPJPY. That's what I mean there, as far as you get your first entry, potentially catch yourself a re-entry, and that continued move to the downside. You just move stops to break even on the first trade, and then take the second trade at a reduced risk. Take full risk on the first trade, reduce risk on the second trade. This helps you to protect yourself overall. So now if price does flip, you will have that first trade would be break even, and you would just take the risk for the 0.5, the lower risk entry. And even sometimes, maybe taking, well, I wouldn't suggest taking profit. I would just take it, because you would say best comes to best. The first trade is at a 1% risk, let's say, and it gave us like a 1 to 4. Let's just say it gave us a 1 to 4. If push down, we got our confirmation. That was the 1 to 4. Oh, wait. Let's do it like this. Push down, confirmation candle, push down, second candle, continuation down. So we take this one at 1%. We take this one now at 0.5%. It generally has a better risk to reward than the first trade. I don't know why that is, but it generally does. It's just something that I've known consistent in the past. So we take this one. This trade runs for 5%. This trade now runs for 2.5% because we took it at a reduced risk. Now we have a total of 7.5% that we made off of 2 trades. And this trade was risk-free, so we didn't have any risk on that trade. And so basically our risk was 0.5 and our reward is, 7.5%. We already have this entry is break even, risk free. We take this entry. Now all we can lose is 0.5, but the reward is now 7.5%. So this is why I would do that instead of instead of taking this trade at the 0.5% here, which was the best overall move, because the safest, shall I say, overall move, we take that out of 0.5%, and we take this trade right here. Let's move this back up at a 1%, now we still have the same total, but we're having more risk because when we move stops to break even on this trade, now we're still risking that full 1% on this trade here. Now if we get stopped out, we still have the same, you know, essentially risk on the table as those other two trades, but we have more risk on this trade because we took this re-entry at a 1% risk, and it's a lesser probability trade. Now I would take this re-entry trade at 1% risk only if I don't take this first trade. So if I didn't get this first initial entry, then I'll take this one at 1% risk because that's my first exposure to risk on this move here, you know. So I wouldn't even take that one at a reduced risk in that circumstance, in that scenario. But if I'm already in on this trade, I would want to take that first one at the highest risk and then my re-entry, because essentially if price pushes down like this, you was in a lot of profit, and it would suck to, you know, have all of that profit and then, you know, price pushes through this other trade that was already at break even and you take an even bigger L after already being all in that profit. It's just not the best, and then you still get the same risk to reward. It just makes the most sense to me personally. So that's my snippet on, you know, risk and situational risk, at least how you differentiate risk per the situation, because it's important. Oh, pink zone, ew, disgusting. We're gonna delete that. I don't even need a pink zone. There we go. So that's pretty much it. I don't really have anything else. Let's take a look at AUD JPY. Did it break for a new high? Connect. It did not break for a new high here on AJ. So price is pretty slow today, but we can expect some more volume throughout the week, and that's what I'll be looking for. So that pretty much wraps up everything that I have for today. Now, let me see. I don't know why all my windows aren't open. Nope, that one's open. Okay, let's see. Oh, it's down here. That's the problem. Okay, there we go.